Looking at the global economy, you can see that there have been cracks appearing, barely held together by central bank intervention. In China, there have been numerous reports of fraud on all different levels of the financial system. Today, we will expose the banking duplicity going on within China. You came here for the truth, so let me unveil that for you. What we saw leading up to the financial crisis is now being exposed in China, so let's get into it. Out of Bloomberg, credit sleuths in China uncover bad debt dwarfing the official 1.5%. So while the official number is 1.5, the estimates range between 6 and 21%. Analysts turn detectives to bypass China's official data. So these numbers came out, and I'll show you that today. For the remainder of this video, I want you to keep this in mind. This is China's bank assets, approximately $30 trillion. What we can see is that while we don't know the factual number, we don't know what it's really at because there's so much fraud and there's so much exaggeration. They leave off the bad stuff, keep the good stuff, and we have skewed figures. Regardless of where it's at, the real assets are what's at risk. That's important to note. You need to understand what's going on behind the scenes. So let's get into some of that today. China's bad loans, searching for the truth. Estimates of percentage of non-performing loans. You'll see the official number here, right at the bottom, essentially. Then you look at the official with special mention loans, the CLSA's minimum, the BMP estimate, and the autonomous estimate. However you want to look at it, we'll take it in the middle, maybe 10% or so. It doesn't really matter. All we know is that it's much higher than what we are presented with. Looking at these statistics, you'll have to start questioning the health of this particular economy. Is it doing really what they say? Is it robust? Is it secure and strong? Or are we just presented with fraudulent statistics in order to keep the global economy above water? Because ultimately, all of these banking institutions and all of these governments are insolvent. It shows us that when you look at the amount of debt that they are carrying. Now today we're talking about non-performing loans. And these non-performing loans, even if it's a small percentage, that's really all that's needed to cause a crisis. Back in, let's say, 2007, we started to really hear about non-performing loans. And they were apparently all secluded to the subprime sector. And it was noted there was a few non-performing loans in subprime homes, subprime mortgages, nothing to worry about. Let's not get carried away. And then it was found out that this was actually bigger. And as people did more digging, they realized, oh, it is actually even worse and even worse and even worse. Then it spread to the whole market. And that's all it took, was the realization of these absolute insane debt instruments that were created. All of these derivative products, mortgage-backed securities, the CDOs or collateralized debt obligations, all of these showed the true fraud that sat behind this system. You as an individual, you have some sort of debt. Maybe it's a mortgage, maybe it's a car loan, maybe it's a credit card debt. And all of that is taken behind the scenes. You have no idea. It's taken by your bank, by the institution, and given to another institution. They sell it off as an asset to them, and it's sold. They package it up, put it inside of something like a credit default collateralized debt obligation, and they take it and it becomes an asset to be sold off to an investor. And that's why they realized at the very end of it all that that was a very dangerous policy. But that's going on still today. Nothing was ever fixed in 2008, 2009, and onward. I was looking for it in 2008. I was looking for it in 2009 and 10 and 11 and so on. Up until today, I'm still looking for the problems to be corrected, and they haven't been. Nothing has been done to fix the problems. You've seen, I've covered it here, all the different derivative products that exist today are worse than they were back in 2008. So we can expect that worse things will happen. The NPL, that's the non-performing loans ratio, implied versus reported. You can see the dotted line here, that is the CBRC. And then you'll see the others here, which is the net debt basis, the implied here, and the total debt basis. Regardless, it's significantly higher than what has been reported. And as time goes on, these numbers will continue to spread. Ever since the financial crisis, these have gotten worse and worse and worse. Look at how much debt is out there. Look at what the banking system has done. When you have this idea that as things are starting to slow down, you should be able to then put your foot on the gas pedal a little bit and get things recharged. But that's not the way it's supposed to work. If things are slowing down, that's a natural part of the cycle. Instead, the central planners have decided they should make sure that gas pedal stays on. We don't want any brakes to be used. Definitely not. And this is a big problem. And it's coming to fruition right now. You're not going to be able to get away with it. Now, this is it's a massive article. Okay, I'm not going to cover it all. If you want to check it out, definitely go to a search engine and type in Reuters Ghost Collateral China. You should probably get that. So let's quickly cover this. Lax lending practices and overvalued collateral spurred the US financial crisis in 2008. Now, banks in China face risks of their own as fraudulent borrowers and corrupt bankers burden the financial system with loans lacking genuine collateral. This is exactly identical to what happened in the financial crisis, which we saw in 2008 and of course bottomed out in 2009. It's happening today in China. It's happening today in the US and in Europe, of course, but we're not aware of a lot of the information that comes out of China. So it's really, really good to hear this type of data. The banker at the other end of the phone line was furious. A pile of steel pledged as collateral for a loan of almost $3 million from his bank had vanished from a warehouse on the outskirts of the city. And this should be a lesson to anyone as an individual, but it really shows us what's going on globally. As an individual, if you buy gold, for example, are you taking physical possession? Or are you simply hoping that the bank has that allocation for you? You know that. You need to realize that. It goes for any asset. You need to know what you're getting. And in this case, people really started to realize that what they were promised wasn't there. Just several months earlier, the banker had visited the warehouse and verified that the steel was there. The first time I went, I saw the steel, he says. Afterwards, the banker got in contact with me and said the pledged assets are no longer there. Where did they go? Did they disappear? Well, nobody really knows. All we know is that what they've told us is not true. It's very, very important. The missing collateral is a setback for the CITIC, but it's indicative of a much wider problem that could endanger the health of China's financial system. Fraudulent or ghost collateral. When bank auditors in China go looking, they too often find that the collateral recorded on the books simply isn't there. This is bombshell news. This is huge. It's not being covered. And I really wonder what's going on to keep this in the dark. This is huge. In some cases, collateral that has been pledged simply doesn't exist. In others, it disappears as borrowers in the financial distress sell the assets. There are also instances in which the same collateral has been pledged to multiple lenders. We saw that with gold and others. One lawyer said that he discovered that the same pile of steel was used to secure loans from 10 different lenders. Is this not a crisis brewing before our very eyes? But you look at the markets, calm as they have ever been, historically, the most calm ever. In the months that we see this type of information coming out, and yet totally fine. If you look at the VIX, you'll see that. With the mainland facing its slowest growth in over a quarter of a century, defaults are mounting as borrowers struggle to repay their loans. The danger of fraudulent collateral in the situation is that it exacerbates the problem of bad debt for Chinese banks, increasing the risk of financial turmoil. A lot of people believe that debt is not an issue, that you don't have to worry about it. This is the exact reason why you do. You as the individual, your city, your state, your province, and your region are all encountering the same problems, and that is too much debt. It will bring the system down. We need to look very carefully at what's going on within China. Any little piece of data, we need to take it, we need to realize what it really means, and then we need to have more evidence, because as time goes on, it seems like there's more disinformation out there, so we need to really look at it carefully. Keep your eyes peeled on this information about the ghost collateral. I think that it is very significant. We can really understand the risks that are coming out of China by looking into this more. Definitely check out this article if you want to pick one from today that was very important. This is absolutely the one. Check it out. You can, once again, links won't be in the description, but if you just want to go to a search engine, you can type in Reuters, China, ghost collateral, and you should come up with this. And last but not least, just wanted to show you this. How bad is it? China's debt is more than 250% of GDP. It's higher than the US. It remains lower than Japan. But some experts say that this concern in China's debt has surged at the sort of pace that usually leads to financial bust and an economic slump. And you see that over time increasing dramatically. How bad is it really though? We don't know what's being hidden off the books. I did a video recently about the $32 trillion, which is being hid from the balance sheets, from the books in China. And that's a pretty extreme number, not compared to some countries out there, that's for sure. But you just compare it to itself in history and realize it's getting really bad really fast. So let's keep our eyes peeled on the debt as a whole, look at all the bad loans, look at the financial crisis which is brewing, and realize that as time goes on, as these stocks continue to rise, you're just going to basically suck in more people and evaporate more of their earnings. That's what's going to happen. Ultimately, people won't sell because they're not expecting it. It's going to happen in an instant. If you found this video informative, please give me a thumbs up. And if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature that will allow you to flip through the pages of these books to see if you like them. The first book is about the 4 asset classes and how to profit from them, whereas my new book takes on familiar concepts, but I get into earning income and reducing your monthly expenses and so much more. So links are in the description below. Take care.